Hello guys, how are you all? Friends, as we all know, Union Bank has released 1500 posts for LBO. What is LBO? That is local bank officer. And the form filling process has been started from today. So Knowledgist is here with banking and financial awareness class so that you can start your preparation from day one. And in today's video also, we will discuss top MCQs of May month. Friends, this is going to be a 30-minute video where we will be focusing about the banking and financial awareness portion in the form of multiple choice question. And today onwards, we would definitely be meeting every day. So for that purpose, do like, share and subscribe our channel, that is Knowledgist. Now, if we move forward, then Knowledgist is coming up with a complete new batch. In this batch, you will be getting the complete course. All these syllabus would be there. Every subject would be covered in this course. And yes, in order to complete with the surface information and get the complete information regarding this course, you can check out the description box. The link is being provided there. So let us not waste our more time here and start with the banking and financial awareness portion of May month 2024. Clear? So yes, now coming up with the very first question, which is asking, what was the total gross GST revenue being collected in April 2024 in India? Hi, Sandeep. So yes, our question is simple, a straight question it is. It is asking the total gross GST revenue collected in April 2024 in India. Whether it is option A, that is rupees 1.92 lakh crore, B, that is rupees 2.10 lakh crore, option C, 1.70 lakh crores, or option D, that is rupees 2.50 lakh crore. Again, repeating the question, it is asking the total gross GST revenue collected in April 2024 in India. We are being provided with four options which are being on their screens. So yes, you have replied already. Great to see. Parul is saying it should be B. Satish 2.10. Sandeep B. Spreading Khushi. Hi, you are also there today. Yes, B. Ranjan B. Lukesh B. So yes, a number of people are here with option B, which is definitely the most confident and right answer. That is 2.10 lakh crore, which means this whole figure, what does it represent? It represents the highest GST collection being recorded and is driven by substantial domestic transaction and import. What does this mean? We came to know that the total gross GST revenue collected in April 2024 is rupees 2.10 lakh crore. Simple. What is new about it? It is the highest GST collection. First thing, and what is the basic reason of it being highest? First is the substantial domestic transaction, and apart from it, import has played a crucial role in making this total gross GST revenue the highest as per now. Clear? Now, would be completing to the next question, which is asking which component of GST collection saw the highest revenue in April 2024? Whether it is central GST, which is CGST, state GST, integrated GST, or option D, that is cess. What is it going to be, friends? It is simply asking the name of that component of GST collection which saw the highest revenue in April 2024. Whether it is central, state, integrated, or cess. Ranjan has already replied with C, 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 C. Okay, a number of C's. Anyone else? Would be giving you all 5 seconds. Go through the question, the answers, the options which are being provided. Sandeep C, Parul, Ranjan, everyone is saying it should be C. Spreading Khushi. Okay. So yes, this time the correct option would be, friends, integrated GST, which means IGST had the highest revenue and it was of rupees 99,623 crore in April 2024. It also includes amount of rupees 37,826 crore from imported goods, which makes it the component with the highest collection. Get my point? Now, what do we mean by integrated GST? Anyone is having any idea? What is integrated GST? See, if we talk about IGST or integrated GST, then it is a type of indirect tax that is levied on the interstate supply. What is it? It is a type of indirect tax that is levied on the interstate supply. Whenever there is some kind of interstate supply of goods and services, then it comes under which form of GST? It comes under IGST, that is integrated GST. Within India, of course, we are talking here. Clear? IGST, who is the collector? If we talk about IGST, IGST is being collected by the central government. Okay? And the revenue, the whole revenue of IGST is shared between both. That is the central and state governments. Clear it is? Now, is anyone is having any kind of query, any question, something to ask? Okay, yeah, very good. Mari is saying correct. It's state to state. Okay, so yes, as no one is having any query, so coming to the next question, what is the RBI's updated guidance note on operational risk management and operational resilience primarily aiming or primarily aim to enhance? It is simply asking the updated guidelines which are being driven by RBI. The name is Guidance Note on Operational Risk Management and Operational Resilience. What is the aim? What is it aiming to be enhanced? So whether it is talking about interest rate stability, credit allocation efficiency, operational resilience, or investment strategies. Anyone else is having any idea? You have already replied. Great. It is simply asking if we talk about RBI's updated guidance note, both on the operational risk management and also on the resilience, operational resilience. Then what is the thing which is being primarily focused here? What is the basic aim? So Niladri, Ranjan, Prince, Spreading Kushi, Vikas, Peli, everyone is with operational resilience. Let us check. Yes, it is the correct option. That is option C, operational resilience. So these updated guidance note, these focus on enhancing the operational resilience, particularly in the face of technological and geopolitical threats. If there are any kind of technological or any kind of geopolitical threats, and also to ensure continuous operations during disruptions. Clear? Now, see, resilient, everyone must be knowing what do we mean by resilient, resilience. Clear? So yes, next question is asking, according to the RBI's updated guidance, which model is highlighted for operational risk management? Second part of the previous question, we can call it. It is asking, if we go through these RBI's updated guidance, then what is the name of that model which is being highlighted for operational risk management? Whether it is balanced scorecard, four corners model, three lines of defense model, or SWOT, that is SWOT analysis model. What is it? Is anyone having any idea? Hi, Koti. What is it? Giving you 5 seconds, go through the question, the options being provided, and come up with the exact name. What is the name of that model which is highlighted for this operational risk management? Okay, Prince Kumar is saying it should be D. Others, are others having any opinion? Vikas Teli is saying C. A number of people, a number of friends of mine are just obsessed with like C, D, A. I don't know why it is so, but yeah, no issues. At least you are replying. Lalit Pal is saying it should be option C. Okay. Ravi Nayak, C. So yes, this time it is going to be option C, which means three lines of defense model. See, why do we call it as three lines of defense model? If we talk about it in detail, okay, then it describes three phases. First, it talks about the structured approach with the business units. These new models, these new guidelines are being focusing upon the business units. Secondly, are being focusing upon the organizational risk management. Okay, if there are any, in order to attain proper functioning of organizational risk management functions, and also they work upon audit functions. And hence, three different successive lines, sorry, three different successive lines of defense are being formed. That is the reason this new model is being called as three lines of defense model. Clear it is? Now, coming to the next question, which is asking, according to the RBI's recent directive, what should lenders do if they have charged customers unfairly? A very simple question, yet important. It is being provided with four options, that is increase the interest rate, issue public apologies, refund the excess charges, or discontinue loan products. Question is simple. It is asking, if we go through the RBI's recent directive, then what should lenders do if they have charged any of the customers unfairly? Okay. So yes, Prince has already answered that it should be C, spreading Kushi C, Ranjan C. See, it is a common sense thing. For an example, if like you were supposed to provide me with 5 rupees, okay, but yeah, I demanded, or maybe you provided me with like 10 rupees. So I am getting like a surplus of 5 rupees. Now I'm getting these 5 rupees in additional. These are extra. So as a basic person, as a basic mentality thing, what should I be doing? I should return these 5 rupees to you, these extra ones. So same procedure should be followed by these lenders, which means they should refund the excess charges. Got my point? RBI has advised the regulated entities to refund any excess interest charges levied due to unfair practices identified during the supervisory examinations. Okay. So yes. Now, next question is asking, what is the primary function of a nostro account in international banking? Whether it facilitates the transfer of loans, acts as a reserve for domestic currency, manages fund flows for international trade, or option D, that is offers savings account for foreign entities. Question is simple. It is asking the primary function of a nostro account in international banking. Have 5 seconds. Think about it. First of all, let me clear this to you. What is a nostro account? A nostro account is a bank account. Basically, of course, it is a bank account which is held by a domestic bank in a foreign country. Held by a domestic bank, but is in a foreign country. Clear? So that is the reason the amount, the currency will definitely be denominated in the foreign country. Okay. The currency which you can be able to take out would be foreign currency. Okay. Foreign countries currency. So yes, what is a nostro account? It is a bank account held by a domestic bank in a foreign country denominated in the foreign country's currency. And nostro word, it means ours. Clear? That is the reason why this particular term is being used when we talk about these accounts which are being there in any of the foreign country but are being held by our own banks, our domestic banks. Clear it is? So yes, that's great to see. You have already answered, and definitely this time the correct answer would be option C. That is, manages fund flows for international trade. So nostro accounts are essential for international banking as they are used by banks. Why? The reason is they do manage fund flows related to international trade, which is denominated in the foreign currency of the country where the account is being held. Clear? Now, next question is asking, according to the RBI's large exposures framework, what is the standard limit of exposure to a single counterparty? Whether it is 10% of the lender's capital base, 15% of the lender's capital base, 20% or 25% of the lender's capital base. Again repeating, if we go through RBI's large exposure framework, what should be the standard limit of exposure to a single counterparty? Okay. So yes, anyone is having any idea? Whether it should be 10%, 15%, 20, 25, anything. Prince is saying it should be D, Sultan B. Okay, Kaliapa C. Have few seconds. Go through the question properly. Okay, others have also replied. Let us check. It is going to be option C. That is 20% of the lender's capital base. See, RBI's, if we talk about RBI's large exposures framework, typically, it restricts a bank's exposure to a single counterparty that it should not be exceeding 20% of its eligible capital base. Okay. And what is the reason behind it? Everything is done. Every decision is being taken because of any particular objective or any aim. So here the aim is to ensure a diversified risk distribution. Okay. What is the aim? Aim is just to ensure a diversified risk distribution, which means in order to lower the after effects if there is any kind of risk related to any like burglary or any counterparty thing. Clear? Coming to the next question, which is asking what products were affected by the RBI's restrictions on Bajaj Finance, whether the personal loans and auto loans, e-com and Insta EMI card, fixed deposits and savings accounts, or option D, that is mortgage and housing loans. Again, it is simply asking the products which were being affected by the RBI's restrictions on Bajaj Finance, whether it is option A, B, C, or D. Take your time, go through the question properly. What should be the product? Okay, Kalapa is saying it should be B. Okay, C. Anyone else? Okay, great. Shritam, B. Spelling Khushi, B. This time the correct option, friends, it would be B. That is e-com and Insta EMI card, which means RBI had imposed restrictions specifically on Bajaj Finance's e-com and Insta EMI card products. And this restriction has now been uplifted. Okay, it is no more being under any sort of restrictions anymore. Clear? Now, next question is asking, what was the impact of the RBI's restrictions on Bajaj Finance loan bookings in Q4 financial year 24? See, of course, there were certain restrictions which we talked about in the previous question. So there would be some after effects. Now, definitely there would be negative effects. So whether it has been increased by 5%, decreased by 8 lakh, increased by 10 lakh, or decreased by 5%, what is it going to be? Okay, Santosh is saying it should be B. What is the after effect or the impact of the RBI's restrictions on Bajaj Finance's loan bookings? If we talk about Q4 FY24, Prabhat, Santosh, Miraj, Ranjan, everyone is saying different, but yeah, this time the correct option would be option B. Clear? That is decreased by 8 lakh. See, due to these certain RBI's restrictions on Bajaj products, Bajaj Finance experienced a decrease in new loans booked during the Q4 financial year 24 by approximately 8 lakh. Clear? Next question is asking, what is the minimum individual exposure limit set by the RBI's draft framework for lenders in projects where the total exposure is up to rupees 1500 crore? We have to tell the minimum individual exposure limit. This limit is being set by RBI's draft framework for the lenders in projects where the total exposure would be up to rupees 1500 crore. Whether it should be the minimum individual exposure limit we are talking about, whether it should be 5%, 10%, 15%, or option D, that is 20%. What should it be? Whether it should be 5%, 10%, 15%, or 20%. It is asking the minimum individual exposure limit. And that is definitely set by RBI's draft framework for lenders. Jimmy is saying it should be D. Shritam is saying it is B. Okay, anyone else? Now, spreading Khushi 10, Sandeep 10. Okay, Sandeep is saying it should be 20. Ranjan, B. Okay, that is 10%. Yeah, great. You are absolutely correct. It is 10%, which means RBI's draft framework specifies that for projects financed under consortium arrangements with a total exposure of up to rupees 1500 crore, no individual lender can have an exposure of less than 10%. Clear? So yes, Kalapa, dear Sultan, it should not be less than 10%. 15% is okay, but yeah, it should not be lesser than 10%, which means B would be the correct option. Next is asking, what must lenders ensure before the disbursement of funds according to the RBI's new draft framework for project financing in infrastructure and real estate sectors? Whether the achievement of financial closure, a maximum moratorium period of 6 months, a positive net present value, or all of the above. Again, it is simply asking the things or the phenomena which lenders should ensure before they are disbursing the funds according to this new RBI draft framework for projects financing in infrastructure and real estate sectors. Take your time, have few seconds, go through the question. It might be seeming lengthy, but no, it is not a tough or difficult one, and yet it is important. What should it be? Have 5 seconds. I'm not going to disturb anyone. Think about it properly. Okay, yes, few have replied already. Great to see. Everyone is with option D. D line. Okay, that is all of the above. So yes, this time option D would be correct, which means this framework requires lenders to ensure all these three things: that the financial closure has been achieved, project has a positive NPV, that is a positive net present value, it should have a maximum moratorium period of 6 months, and of course, as I told you already, achievement of financial closure is also compulsory. So yes, is anyone having any idea what is a moratorium period? You can see it is being written here, a maximum moratorium period of 6 months, which means it should not be exceeding like 6 months. So friends, a moratorium period is a temporary pause in the repayment of a loan or debt. It is a simpler manner you can understand it. What is it? It is a temporary pause in repayment of a loan or debt. Clear? So basically, it is a period of time when the borrower doesn't need to make payments. Usually at the beginning of the repayment schedule, this whole moratorium period, like it is a kind of temporary suspension of loan payments, is being granted. It can be granted by any of the lender, which allows borrowers to defer repayment of a, like for a specific or period. This time, if we talk certainly here, this should not be exceeding, this moratorium period should not be exceeding 6 months. Clear? Now, coming to the next question, which is asking, what can standalone primary dealers, that is SPDs, now utilize according to the new RBI directive? Only domestic currency for borrowing. Option B, that is foreign currency from international markets, trade in equities only, or investments in private corporate bonds. Again repeating, we have to tell what can the SPDs now utilize according to the new RBI directive. What should it be? Take your time, have 5 seconds, and then reply. We are being provided with 4 options, like we are getting for every single question. What should it be? What should it be, guys? Take your time. Yeah, great. So like few have replied with the, it should be option C, that is trade in equities only. What about others? No one is having any idea. How can it be possible? Okay, Lalit B, Shritam D. This time the correct option, my friends, would be option B, which means foreign currency from international markets. See, RBI has permitted SPDs to borrow in foreign currency, which will definitely enhance their funding sources for operations in the government sector market, which is GSEC market, according to the new directive. Clear? Now, Next question is asking, what significant change did Bloomberg announce regarding Indian government bonds in March 2024? Removal from all indices, inclusion in the Bloomberg Emerging Market Local Currency Government Index, option C, that is a downgrade in the investment grade, or option D, that is exclusion from the Bloomberg Commodity Index. Again, it is simply asking the significant changes which Bloomberg has announced regarding Indian government bonds in March 2024. Giving you 5 seconds to think about it properly. What should it be? Go through the question. It is a very straight asking question. There is nothing which is so clumsy or you should be messing up around with different facts. No, it is simply asking what should it be. Okay, so Sultan Singh should be D, Prabhat B, Jimmy Tiger B, Ravi Naik B, and Spreading Kushi is also with B. Okay, so this time, yes, the correct option would be B. That is inclusion in the Bloomberg Emerging Market Local Currency Government Index. So if we talk about March 2024, guys, then Bloomberg has announced the inclusion of India fully accessible route, which is FAR, bonds in its Emerging Market Local Currency Government Index, which is definitely a significant development for India's GSEC market. Next question is talking about what is the strategic what is the strategic significance of integrating UPI with Ghana's GIFs as discussed in the recent India-Ghana Joint Trade Committee? Whether it is to bypass traditional banking systems in international trade, to provide a platform for digital transformation and financial inclusion in Ghana, or to eliminate the use of mobile payments in Ghana, option D, that is to enforce cybersecurity measures strictly in both the countries. We simply have to tell the strategic significance of integrating UPI with Ghana's GIFs. Have 5 seconds, think about it. What should it be? Okay, so I don't remember the name, but one of my friend was asking previously, if I'm not wrong, that is there any interest in between the moratorium period? Like you must be remembering, we talked about what is the moratorium period. So yes, my friend, interest continues. Even if you are going through this moratorium period, interest continues to accumulate during a moratorium period also. Even though you are not supposed to pay it at that certain time because you are not paying it. Okay. But yeah, it continues to be accumulate. Is it clear? Okay, if you have answered for this particular question, B, D, Venkatesh is Sandeep B, Ranjan B. Okay. So yes, this time, my friends, the correct option would be option B, which is to provide a platform for digital transformation and financial inclusion in Ghana. Clear? So yes, the strategic significance of integrating UPI with Ghana's GIFs, which is being discussed in the recent India-Ghana Joint Trade Committee, is simply to provide a platform for digital transformation and financial inclusion in Ghana. Next question is talking about considering the discussions on a local currency settlement system between India and Ghana, what could be a potential outcome of such an implementation? Whether decrease in bilateral trade due to complex currency regulations, reduction in trade barriers, and cost savings on currency exchange. Option C, that is increased resilience on third-party countries for trade settlement, or option D, which is complete phase out of the local currencies in favor of a unified digital currency. Go through the question. It is asking if we talk about this discussion on a local currency settlement system between India and Ghana, then what could be a potential outcome of any kind of such implementation if there is any such implementation being provided? Okay. Anyone? No one is having any idea. How come it be possible? Okay, if you are saying it should be D, if you are saying it should be C, Ranjan B, Spreading Kushi D. Okay, great. This time it would be option second. That is option B. Reduction in trade barriers and cost savings on currency exchange. See, as we talked about the local currency settlement system, which took place between India and Ghana, it will definitely reduce dependency on third party currencies. Like we would not depend further like on the USD for trade settlements, thereby lowering cost and trade barriers if there are any kind of trade barriers. Clear? So yes, friends, one of you were asking what is a standalone bank. See, a standalone bank, these banks operate primarily online with a minimum of non-interest communication. They work primarily online and there is a minimum of not internet communication. They often have lower interest rates and charge higher than any of the street banks. So what is the stand? And if we talk about these standalone financial statements, then in these reports, the financial performances, position, cash flows of the individual companies from other separate entities are being considered, and the subsidiaries, every information is being provided on these reports, which are being provided by standalone banks. Clear? So yes, that's it, my friends, for today's session. Tomorrow onwards, we will definitely be meeting here on a regular basis. We would be completing the banking and financial awareness portion. And if you have to join into our course for the upcoming exam of LBO, Union Banks Oriented Exam for Local Bank Officer, then of course you can go through the description box. The link is being provided there. Till then, have a nice further time, you all. Study hard, work smart, and signing off, Pragya this side.